Hello, everyone. Welcome to the market update for Tuesday, December the 8th. We're starting the classes a little bit earlier. One of the reasons for that is we're going to be adding a new feature to to both the Tuesday and Thursday updates. I'm going to spend the first 20 to 30 minutes is going to be like I've normally been doing it, where on Tuesdays we'll do the market update stuff. Thursdays we'll do stock specific. Well, we'll do kind of a combo market update and stock specific stuff. But then the next 20 to 30 minutes, I'm going to start doing some trainings where I'll take a topic and it just kind of teach us a topic. I kind of did this in the last update and got some good feedback from it, and so we decided to go ahead and implement that in. I'm doing it the second half hour because the training is going to be really geared towards really beginning traders. I'm assuming that a lot of the people I'm going to be teaching are people that haven't traded before, don't know much about reading charts or anything like that. And so it's going to be very basic. And so that way, if you're a little bit more experienced and all you're wanting is the market update and a few stocks that I like, we'll take care of that up front. Those of you that want the training and you're more of a beginning trader, you can stick around for the next half and get some of that training. So anyway, that's kind of what we're kind of the format that we're going to kind of do going forward. So the updates will be a little bit longer. Total will be a little bit longer in the 30-minute to 1 hour range, just depending on what topic we're covering at the time. So anyway, that being said, let's go ahead and go over the market update today. As far as the direction alerts, we'll get into the charts of the S&P and Dow, but everything looks like the market is still wanting to go higher. We're not in any extreme range yet. The momentum indicator is still is in that buy range. We're not in an extreme range there. The breadth indicator is in the very beginning stages of the extreme range, but as we know, many times you can stay in that range for a while. You can get all the way over to the right side of that range there. So there's still potential for us to move higher. And then the sentiment indicator it's in the complacency area, but not an extreme complacency. So those indicators, although they're getting into that overbought stage, they're not quite there yet. We can compare that with the buy-sell ratios. Now, the buy-sell ratios are in an extreme area. They've been in an extreme area, though, for the last few updates, and we've just kind of grinded higher. The markets have kind of grinded higher. That could be what we continue to do is go higher, but kind of grind higher. We'll see how that kind of plays out. The sentiment indicator is off of the extreme. We're not quite there. Even with the market moving higher, over the last week or so, like I said, it's kind of grinded higher, not big, huge moves higher. We're still off of that extreme area there, so there's still potential, I think, for the market to continue to go up. Now, that being said, there's also we are stretched a little bit, so that if any bad news really comes out and freaks the market out, we could see a little bit of a pullback. But I think it'd be kind of more of a minor pullback. I still think overall the market is going to continue to move higher. Now, one thing I have heard a lot of in the news recently is people pointing out how stretched this market is, particularly from a valuation standpoint. This market is I'm telling you right now, this market is very similar to the internet bubble of 2000, 1999, 2000. This was early in my trading career. I made a lot of mistakes during that period of time, but I learned a lot of lessons, and I really haven't been able to apply those lessons until this market showed up, where we're seeing very similar things. So I'm hoping to be able to draw on that experience, and part of that experience is being able to ride the wave as long as it's there. We're seeing some pretty crazy things going on. A lot of you might have heard in the news a lot of the talk about the SPACs. Now the SPACs are basically basically what's happening, it's the same thing that was happening in 1999, but in just a little bit different way. Now, I don't fully understand what SPACs are. The good news is you don't have to fully understand. If you can understand the basic concept, you can trade these things if you want. But back in 1999, there were a lot of companies that did an IPO or initial public offering where they started becoming publicly traded. And these companies were not actual functioning companies. They were basically a business plan. And, so they were a business plan, and then people would create a business around them that they could sell shares, and they would use the money that people were using to buy the shares to fund, to try to start up that company, make that company real. Okay. It's kind of like me saying, I want to, especially with all the battery operated cars and stuff right now, and everything, all the battery technology, it'd be like me coming out and saying, I think a great idea would be a battery operated plane. I mean, wouldn't that be fantastic? You just charge the plane up. It doesn't pollute the skies, and I'm going to use this battery technology. I'm going to create a battery operated plane. Here's my company, whatever the company name is, and I'm selling shares for this company. And you guys are buying the shares. You think that's a great idea. This is a great company. It's a battery operated plane. I'm worried about the environment, and I want to invest in this. Well, the problem is I'm not an actual company. I don't have any planes yet. I just have an idea, and I'm now selling shares to fund that idea. Well, that's pretty crazy, right? If you really understood that, a lot of people that invest in something like that would think that it's already going, it's already happening, and it's going to be the future, and it could be. That's the thing, is some of these ideas do take off, and they do become real, and they do make a lot of money. But that's what you're investing in at this point, is just the idea. And so it's pretty crazy when you get into that environment. But now what causes this? Well, what causes this is when you have a situation like we have with zero interest rates and the Fed pouring money into the economy to try to get it to jumpstart, you have all this money floating around. It's got to go somewhere. And this is the perfect time for these ideas to get started. People and get funded, and so there's a lot of this loose money out there that needs to go somewhere, and so what happened back in 1999 is these companies would do the traditional IPO. They would come out and they would run, these stocks would take off, and they'd make these huge moves in a very short period of time. People made a lot of money on them. But when it finally ended, when the market finally there's no more money to go in to fuel these things, it came crashing down. And so we're in a similar situation now. Going back to the SPACs are basically the same concept of an IPO, but they're a little bit simpler because you don't have to go through all the complexity of the IPO process. But it's basically the same idea, is that you're investing. You're basically investing into these companies companies that are then going to start up these other ideas or whatever. So the companies you're investing in are legitimate companies, but they're going to work on these other projects. So the bottom line is that the process is now simpler for these ideas to get out there in the marketplace and people to invest in them. And the same thing is going to happen. It's not going to end well when these things come crashing down and the market comes crashing down. But as we saw in 1999, the market, we saw the market doing unreal things from October of 1999 all the way till the final crash in April of 2000. I remember December of 1999 thinking, man, the NASDAQ, there's no way this thing can go higher. It's gone so far, so fast. Some of these individual stocks have doubled and tripled within months, not years. And and that was December, and it lasted all the way out till April before it finally kind of came crashing down. So what we're trying to do here is kind of ride this wave as long as we can. There's a lot of money to be made with some of these trends and some of these stocks that are high flying stocks, really taking off and all that kind of stuff. In fact, maybe on Thursday I'll go through, for those that want to speculate a little bit, I'll go through some of these high flyers that I've been trading right now and have really liked and worked pretty well, have pretty good patterns and things like that. I'll try to see if there's some that I can go over on Thursday. But I will emphasize that they're riskier stocks. And by the way, if those that don't want to mess around with that, stick to kind of the tried and true process of legitimate companies with actual businesses that are actually making money and that kind of stuff. But the point is that we'll kind of ride these as long as we can. And there's a lot of warning signs that can start to show up when we're probably at that stage of the market crashing. And one of those that I think we still need to see is I think we'll see money start going back into other companies, not the high flyers, and really start driving those values up. I think that, and I talked a little bit about this last week, I really think that we're going to see money flow back into the FANG stocks, Amazon, Google, Apple, Microsoft, and those stocks really just taking off and going and becoming outrageously expensive. I think that's something that would happen prior to any major collapse. So if we start to see that happen, and the market is just every day we're going to new highs, and I think it'll be very similar to 1999 in that I think it'll be the Nasdaq that'll be the one that really starts taking off, because that was the index that really was outrageously expensive. And I think we'll probably see something similar, just because technology is really at the heart of this, what the market's been doing over the last several years. It's been the leadership of the market during this whole bull market. So anyway, that's kind of that's kind of a long-winded explanation here, but it ties into a lot of stuff that I do go over, which is, I think that this market still has room to run. I think we can still take advantage of some of it and really make a lot of money on it. And hopefully we'll get those warning signals that start to show up when you're getting near the end of it, and we can go to the sidelines and wait for the inevitable crash, whenever that is, and then have a buying opportunity of a lifetime as those we're able to ride those things back up again. Now, going over the basic charts here, one thing I mentioned last week is that we're going higher, but we're kind of grinding higher. We're not seeing these really big up days like we did right in through here. You can see a very steep rise in the market through there. Even through here, we saw a very steep rise. We're just kind of drifting higher. At some point, I think we're gonna start taking off again. Although if I see any warnings that we could also come back and retest this breakout area too. You could see a couple of days where you come back down here and then go, and that wouldn't be out of the ordinary either. So I don't see that happening, any warning sign of that happening yet, of a pullback, even if it's a little pullback, but it's definitely something that's possible. But so far, it still looks like we're in this uptrend. It looks like it wants to continue. And we see that on most of the other indexes. If we look at the Dow has really been more choppy the last month and a half there. Nasdaq has been a little bit steeper in its move. It's been outperforming. And the small caps have really been outperforming as well. Okay. So, and on a lot of these, you're still not in that extreme area there. Although I think the Nasdaq 100. Let me go back to that one, because I think that one was close. Yeah, that's getting close to getting to that extreme area, but we're still not quite there yet. So bottom line, in the near term, it looks like we should continue to move higher. Now, if we move down the list here on bonds, let me take away the volume bars here. We're still acting like a downtrend, lower highs, lower lows, and a lower high right here. Now, we had basically an even low right here, and we've kind of rallied off of that. If this now moves up and goes to a higher high, that could indicate a change of trend. And so we'll look for that. But until then, we're assuming this is just another rally within the downtrend, and this downtrend will continue until we'll see until we see that higher high taking place. I'm going to at least assume that this is still in that downtrend. Gold, kind of the same thing. It's been kind of in that lower high, lower low. We've had a little bit of a run up right here recently in gold. It probably needs to. Well, you've got a little bit of a lower high right here. If you break above that, you might. It's possible that gold could be in a trend reversal at that point. We'll keep an eye on that and see if we see that gold starting to break that pattern. Oil's bits continuing to trend up. I don't trust oil right now, but I talked about this either last week or the week before, where I said, from a sentiment standpoint, this is the perfect time to invest in oil, because you want to invest when nobody likes it, nobody wants to own it. And I'm definitely in that boat where I don't want to own it right now. I'm waiting for it to show a little bit more life. I still think there's too much supply out there. But I mean, if you're going off of just purely, a sentiment type, type of reason for getting into a trade, this is probably a longer term investment. This could be the early stages of when it starts taking off. It could also mean that you're holding it for a few years where it moves sideways, too. So, but it's definitely trending up in the near term, and same thing. We'll see if this low right here. You've got higher highs and higher lows. We'll see if that holds. If it breaks to a lower low, then it could indicate a possible trend reversal. So we'll keep an eye on that. And the dollar, it's still trending down. A little bit of life here, a little bit of a bounce the last couple of days right here, but we're assuming that this trend is still heading lower until we see that change. And then the VIX, we kind of moved a little bit sideways through here. Actually, during this area, we did have a couple days last week where the market was up and the VIX was up, but it was slightly. It wasn't real dramatic, and it was only a couple days there, and then we've resumed that moving lower again. VIX is dropping back down again today, indicating again that there's really not any concern of a pullback, at least by the professional traders. Now, they're not always right, and definitely news can come out of nowhere, and you can see that VIX start spiking. But there doesn't seem to be any concern right now, and with everything else we're looking at, it seems like the market is acting like it wants to go higher. Okay. Now, as far as some individual stocks to look at here real quick, if we go under computer and technology under the hold, a couple of these we've already kind of gone over, but some of them are close, or there's a couple of them that are flashing buy signals today. CBHT is one I like right here, 98 strength rank. Switch this to signals. Now, we were looking at this one last week, and I think I pointed this out that it was, I think it was somewhere in this area right here. And I said, well, it's come back. It had this nice move up. We had this nice move up. It pulled back. Nice move up here. It's kind of pulled back. It kind of pulled back to the breakout area right there. I might have even said it's still possible it could move a little bit lower, get closer to that breakout area, but it doesn't have to. Well, it did that today where it came down here lower. But if you look at the way it moved today, it actually has a bullish reversal. So here's where we opened. We opened right at that breakout area. And right now we're trading higher than where we opened, but still lower than where we closed the day before. So it's showing that the stock is down. And, if you look over here, and this is why you can't always look to whether the stock is up or down. It doesn't always tell the whole story. Yes, the stock is down, but it looks like it might be bottoming out. It might be about to start to move back up right here with the way that price action is behaving today. Now, we still have an hour and a half before the market closes, and that candle could come all the way back down here, and that wouldn't look very good if it came all the way back down to the open by the close. But if it holds right here, it could be an early signal that this thing is about to start to move back up again. And now you're waiting for confirmation anyway. You're waiting for this to go back to a buy signal, turn the signals back on. We're still a little ways away from that happening. But that, that's why it's important to recognize some of these things here. Is maybe you take a more aggressive approach. Decide that you don't want to wait for that confirmation of the buy signal. You draw a line right here from the previous breakout area, and you say, I'm going to buy that bullish reversal candle, and then I'll put a stop below that breakout area. If it fails to go up from here, because that should signal the bottom and the start of a move up, that behavior. If it doesn't, it drops down into here, then stop out of it. You don't lose very much. But you also, with that more aggressive entry, you could make a lot more money if it indeed starts to go up from that point. But that's always the decision. The more confirmation you wait for, the more likely the move you're going to get. The more confident you're going to be in the move, but you'll make less money than you would if you had more aggressive approach. The problem with an aggressive approach is you don't have the confirmation yet. It probably is going to fail a lot more often because you don't have that confirmation yet. But there's potential to make more money if you are right. So that's why there's really not a right or wrong way to manage a trade, because there's a lot of it depends on your own risk tolerance, your own preference. But there's pros and cons to each approach. So, there's trade-offs that you have to consider. And so, there are times when I'm more confident and I'll have a more aggressive approach into something. And there's times where I'm less confident and I want as much confirmation as I can get. And I'll take a little different approach there. Okay. All right. Now, under computer and technology, again, if we look at the CALX right down here, I think we've gone over this one before. This is flashing a buy signal today. And again, I like this consolidation through here. Here's a little bit of a corrective behavior. He moved up, formed a little bit of a step right here, moved up, consolidated right here. And it looks like this is getting ready to take off again. And so that was flashing the buy signal right now. So, all right, let's do just one more here, and we'll get into the training. If we go over the sectors here and go down to, actually, let's do two more. If you go down to industrial products, go into the hold section. This is one that I've been trading for a while and I really like. It's Plug Power, 99 strength rank, and it's really kind of taken off here today. but if you look at the volume bar too, look, it's taking off on very high volume. So, here was a move back here on high volume, and it ran for a little bit right there, and even with this pullback, it's gone higher again. So there's definitely more money pouring in to the stock. On the up days, there's usually higher volume, a lot higher volume. On the down days, it's usually pretty light volume. But that one looks like it's taken off again, and it's really easy to look at this and say, and really under normal market conditions, I would agree with you where you say, well, boy, this stock just a few months ago was at $6. It's pretty much tripled in value in 4 months, 5 months, or whatever. How much further is this thing going to run? I mean, this is crazy, but this is what happens in this type of environment. So this would be one of those things that normally I would say I don't know that I would chase it, but having gone through what happened in 1999, 2000 internet bubble, this thing could double or triple again before it's done. It can really get that crazy. So I wouldn't necessarily shy away from that move in this market environment. And then there's another one here. Let's go under autos. I think we talked about this one last week as well. I still like it, but so low right here, 97 strength rank. This is the electric vehicle stock, an electric vehicle stock. Let's go to the signals here. You want to see a remarkable move. This thing went from $2 just a month ago all the way to $10. Dropped back down to about a little over $5, but now it looks like it's starting to run again. So these I'm telling you, these electric vehicle stocks are very popular right now. Again, they're going to crash at some point, crash back down at some point. But as long as the market momentum is there, these could still make some of these moves. And if this stock just gets back to where it was just a couple weeks ago, it could pretty much double in value, which is pretty incredible. So this is one I like. Has a good strength rank. All right, so that basically wraps up the main update part of the class. We're going to move now into a little bit of training. And like I said, the training is going to be geared towards people that are just starting out. It's going to be some of it, not all of it, but some of it's going to be real basic. And if you've been trading for a little while, you're probably not going to want to stick around because it's too basic for you already understand it. It's maybe too basic for you, but I want to see if we can help some of these newer traders get trained properly and learn how to read some of the stuff themselves. Because there's great value. There's value in the software. The software is designed to make everything simpler. Those that don't even want to learn how to trade, they just want to make money. There's a real simple approach where you can look for 98 strength rank, going from hold to buy, and we found a lot of great trades over the years doing that. There's other approaches too that we'll go over with the software and go over and show you how to use some of the other features. But then you can go a step further, and if you can learn how to read a chart, learn how to read price action. You see me do it in the updates all the time, and in the stock-specific classes as well. And if you can learn how to do that, it only enhances your ability to find good trades. Because you see me a number of times where a stock has 98 strength rank and has all the algorithmic features of a stock that could go higher, but when you look at the individual chart, the chart pattern may not look great, or looks like it could drop a little bit further. And And I haven't liked it. And there's been other times where I've chosen a 95 strength rank. It has a lower strength rank, but the chart is remarkable and has a very high probability of going higher. And so I think there's real value in learning those other techniques, and it can only make you better. And if you really focus on becoming a better trader, I think it'll definitely help you. So the topic I want to go over today is understanding just basic chart behavior. How do you recognize a stock that looks like it's trending up and looks like it's trending down? Let me go back to the chart of oil here, but before we get into analyzing that chart, I want to just kind of draw. I want to kind of just draw what I'm looking at. In fact, let's go back to I think I have a little bit of chart space on the. There we go. I got some chart space here where I can draw. The main concept, and I'm going to talk about concepts, and obviously when you talk about real life, it's not going to, the real life charts aren't going to move exactly how I'm going to show you in the concept, okay? But once you understand the concept and you're looking at the charts, you can see they're not always going to perfectly move this way, but many times they will. And when you can recognize those concepts, it's much easier to see it on the actual charts, even though they're not moving in that same kind of perfect fashion as the concept. But the concept is when you're in an uptrend, stocks will look like we talk about staircases. It'll look like you're going up a set of stairs. And you'll hear me often talk about impulsive versus corrective moves. Impulsive moves are when the stock is moving sharply in a direction. That could be up or down, but it's where stock starts to take off. It moves up for several days in a row. That's called an impulsive move. Corrective moves tend to be more choppy or more sideways, or they could just be a counter trend move where you move down a day or two and then you're right back to moving up again. But they typically are more choppy or more sideways, and these create steps. So if I'm in an uptrend, I have an impulsive move up and then a step, and then an impulsive move up and then a step, and it looks like I'm going up a set of stairs. And in the process of this, what you're creating are higher highs and higher lows. So as long as the stock is showing you higher highs and higher lows, the trend is up. Now, again, one other thing I need to point out is just by recognizing this stuff does not mean that a stock that's trending up has to keep going up. We cannot know exactly what a stock is going to do. The sooner you accept that, the better. I've seen people that chase software programs and gurus and every type of gimmicky thing out there because somebody tells them they can tell them exactly what a stock is going to do, and you want that. We all want that. So we're going to spend whatever money to know exactly what the stock is going to do. And then we find out that no, we can't. And that can get frustrating. Well, I'm going to put an end to that. We're going to just accept that we can't know exactly what a stock is going to do. And anyone that tells us that they know exactly what a stock is going to do, we're not going to believe them because we know that we can't know that. But we can observe probabilities, and that's what trading is all about, is observing probabilities. And the more probabilities I can line up, and that's what we do in these classes all day long, is we analyze the probabilities. If you notice the process each week, we'll look at different things. Some things right now are showing us the market should continue to move up. But if you look at the buy-sell ratio chart, it's saying we're at an extreme on the buy-sell ratio chart. Okay, that's one warning sign that maybe we're getting a little overdone, but there's a lot of other signs that are saying we still could have room to run. Now, when we start seeing 3 or 4 or 5 things warning us that we're about to pull back, then that's when we say, hey, I don't know what's going to happen next. I don't know the future, but there's enough of these probabilities that are saying that we're going to pull back, and I can act accordingly. And when it does pull back, you feel like a genius. You feel like you do know what the future is, but every now and then the market will remind you that you don't. And so we've just got to make sure we always remind ourselves that we can't know exactly what's going to happen. So that's the basic concept of an uptrend. Now the downtrend is just the opposite, where you'll get an impulsive move down, and then it'll kind of maybe chop sideways or try to rally up a little bit. That creates a step, and you look like you're going down a set of stairs, and you've got lower highs and lower lows. Now, what gets people into a lot of trouble is, especially if you like to buy pullbacks, is you say, boy, this stock has come way down right here, and it's going to go. I know it's going to go back up. I'm going to buy in right here. And then you buy in and it goes down, another $10 or $15, and you're like, well, why didn't it go back up? Well, because you bought into it when it was acting like a downtrend. It was telling you it's in a downtrend, and you were guessing where that bottom was. Okay. Now, I'm not saying that we can't get aggressive and buy stocks that have pulled back quite a bit, anticipating that they're going to go back up again. But if it's acting like a downtrend and I'm trying to pick the bottom, then I better understand that's what I'm trying to do. It's not behaving like an uptrend. The other thing I can do is I could wait for it to start behaving like an uptrend. Well, what would be an indication of that? Well, if it starts to go to a higher high, that could be the first signal that you're changing direction. Maybe you wait a little bit further and wait for it to pull back a little bit, see if it has a higher low. You say, okay, now you have a higher high and a higher low. This must be the bottom, because we're now starting to act like an uptrend. We're acting like we're getting higher highs and higher lows, and we're acting like an uptrend. Now, again, I'm going over concepts here. It doesn't always work out this perfectly, but that's kind of the basics. Okay. Now, there's something else I can throw in here that if you can get this down, it could really help you as well. In this whole process, what's happening in the stair-step process is stocks are alternating between, what I like to call impulsive and corrective moves. Impulsive moves are the sharp direction. In that direction, corrective is more choppy, more sideways, creating the steps. Very often, when you're in this uptrend where you're stair-stepping up, impulsive, corrective, very often when you about to reverse trend, what you'll get, not always, but a lot of times what you'll get is you'll get back-to-back impulsive moves in the opposite direction. When this stock is getting ready to go into a downtrend, what will usually happen is you'll get an impulsive move up followed by an impulsive move down. And then if I see a stock that's been trending up and has an impulsive move up and an impulsive move down, it doesn't always mean that trend is over. It doesn't mean I'm going to go short the stock. But that could be a first signal that it's reversing trend. And what I want to really pay attention to is what is the next move. Because if this stock, after that impulsive move down, starts to move more choppy, more sideways, that's a corrective move. That could be an indication that now what you're getting is impulsive down, corrective. The next move could be an impulsive move down, and you're in a downtrend. Now, the decisions I could make if I see that is when the stock comes down an impulsive move and then starts to move up a little bit, but it's chopping a little bit. I could say, okay, I don't want to buy back into this trend because that's a warning sign to me that we could be in a trend reversal. I don't want to buy into a stock that's probably going lower. Or if I'm in a trade and I've been riding this trend for a while and I see this behavior, I might say, hey, maybe now it's time to get out of the whole thing. I've had a nice run. I've made nice profits right here. Maybe it's time to take my profits and get out. So there's a lot of decisions, as you can see, that you can make based on understanding the chart behavior. Now, something I went over with you, those that were here on Thursday. And by the way, if you didn't attend the Thursday class, it was just off the cuff. I did a training just based on some stuff I saw. You might want to go and review that recording. There's a lot of good stuff that I went over in that class. Some of it I'm kind of going to review right here. But another thing that I went over on Thursday that I think is helpful in this whole process. So you have the stair-step process, impulsive versus corrective moves. We learned that very often when you reverse trend, you can see an impulsive move, back-to-back impulsive moves in the opposite direction, impulsive up, impulsive down, and you get corrective, and then you drop, you get corrective. When you hit a bottom, very often you'll get an impulsive move down followed by an impulsive move up. And then you see corrective, and then you can start to reverse trend. Now, one of the things we went over on Thursday was taking this a step further. I said, whenever you see a stock moving sideways, well, we recognize that now as that's a corrective move. Whenever we see a stock moving sideways, we want to pay attention to the direction it was moving in before it moved sideways. What was it trending in? What direction was it trending in before it moved sideways? That's where it's more likely to go after it's done moving sideways. Now, a key word there is after it's done moving sideways. And another key word is more likely. That's where it's more likely to go after it's done moving sideways. Again, we don't know exactly what it's going to do. I've seen plenty of stocks that have moved, had an impulsive move up, move sideways, and they come crashing back down. That's usually a lot more rare. So it made the lower probability move, but it also lost me money because I was expecting that trend to continue to move up. So that's going to happen. We'll get into trade management later on, which is a whole other thing that you got to manage this stuff because you're going to be wrong. You want to make sure that when you are wrong, it doesn't wipe you out. Over here, whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. In this case, it was down. That's where it's more likely to go after it's done moving sideways. Now, let's see if we can see some practical application of this. Let's go to, because I noticed this on the chart of oil as I was going through I always recognize it. It's just when you're looking for examples, it jumped out at me as a good example to use for this concept here. So let's look at the recent move in oil. First of all, look what happened here. It had an impulsive move down, move sideways, and then we had an impulsive move down, followed by an impulsive move up. Again, I don't know if it's definitely changing direction here, and we didn't get much of a step right here as a one move down and then it went right back up again. But so let's kind of skip this one and go up here a step further here. So here's an impulsive move up. And then what happened? It started to move sideways. Whenever you see a stock moving sideways, you want to pay attention to the direction it was trending in before it moved sideways. That's where it's more likely to go after it's done moving sideways. So there's your step right there. And then you had what? Another impulsive move. Now, what has oil done since then? It's moving sideways. Now, why did I say that I felt like oil was acting like it still wanted to go higher? Because that's what the chart is showing me. You see a stock moving sideways? What was the trend before it moved sideways? It was up. Where is it more likely to go after it's done moving sideways? More likely to go up. Now, we'll see if this plays out over the next few weeks and see if it does actually go in that direction. By the way, it still could be in a sideways move. You could still drop down here and, here's kind of your sideways range right now. There's still room for this to come down a little bit. But overall, it should continue to move up. Right now, oil is acting like an uptrend. And so I'm going to assume it's going to continue to move up. Now, you can go back here, and although you can see it was moving higher, you don't see a real clear impulsive corrective move, although there's a little bit of here's a little bit of an impulsive move here. Went up for a few days in a row right there. This is real sideways right in through here. But here's a good example of it doesn't always work. It looked like it was starting to go again, and then what happened? We had this drop. Get used to it. That's going to happen. That's why I'm trying to teach the concepts, but there's more to it than just that basic concept. But this will help you out a lot in just making sense of some of these charts and wondering, how does Jerry know, this thing is going high? How does he always know this thing is likely to go higher and it goes higher, or likely to go lower and it goes lower? I'm not that smart. I'm not a genius. I'm not psychic. It's just I'm really good at recognizing these clues, and it's been years, over years I've put in recognizing these little clues to where now they become automatic. I pull up a chart and this stuff just jumps out at me, but it came through a lot of work and just making it so just part of it's like anything. It's like when I got my kid's first ultrasound, I'm sitting there in the doctor's office, and they're showing me the head and the arms, and I'm taking their word for it. It looks like a TV with the cable out, staticky and everything. How can he recognize this stuff so easily? Well, because he's trained his mind to recognize it, and he sees it instantly and perfectly. Well, it's because he's put in all the work over the years to get to that point. It's the same concept. All right. Now, let's go to a stock. Let's go to computer and technology stocks. And under computer technology stock, here's Zoom Video. Boy, you hear a lot about Zoom Video. Why? It has a 98 strength rank. Why didn't I bring this one up in class today? As a buy. Why do I not want to jump into Zoom Video right now? Now, this could change, but as of right now, why don't I want it? Well, impulsive move down, corrective, or choppy. Impulsive move down. By the way, sometimes your steps could be almost look impulsive, where it's not real sideways, but it was just a counter trend move. It was a step, and it moved down again. So you've got lower highs and lower lows right through here. Now, you almost got, even as much as it rallied right here, it still ended up being, as it reversed back down, ended up being a lower high. This even right through here looks a little bit more choppy and more sideways, except for that last little move. And then you had this sharp move down, just in the very near term. You had this sharp move down. And what is that? That's a sideways move. Well, what did I teach you? Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in or trending in before it moved sideways. That's where it's more likely to go after it's done moving sideways. Well, that move was down. And now we're moving more sideways here. There's just too much of a probability that it has another move down. Now, it may just be one more move down, and maybe you get an impulsive move down right here, and then an impulsive move up, and then you start moving sideways again right here. That would change everything for me. Because now that's acting like an uptrend. Or it could be in an uptrend. It could be in a trend reversal, actually, is what it's acting. I don't know if it's an uptrend. It's not acting like an uptrend yet because it needs the higher highs, higher lows. But I would say that could be a trend reversal. Now, I could wait for more confirmation of a move up. Maybe I wait for it to go back to the buy signal with that type of. So now you can also add the buy signal into this as well, where you're starting to see it act like an uptrend and you're getting the buy signal after that pullback. It makes me a lot more confident buying on that buy signal. So on Thursday, what I'll try to do then is we'll try to, as we look at some of the individual stocks, we'll try to see if they follow, see if they're good examples of this behavior and help maybe reinforce that behavior a little bit. Okay. I mean, we could even look at let's look at, so CALX, this is what we went over today. So immediately when I pulled this chart up, what jumped out at me was that I see the stair step. This is moving sideways. What direction was it trending in before it moved sideways? It was trending up. Within 2 seconds, I liked the chart. I already liked the chart. I already liked the stock because it was a well, this was a little bit lower strength rank. This is a 95 strength, but still a high strength rank in a sector that was near the top of the sector list there. So the software was telling me this is a good stock. When I went under sectors and computer and technology, the software was saying, hey, we're in the top sector performance-wise, not quite a 98 strength rank. There's a 95 right here. And as soon as I clicked on that and the chart came up, I liked it. Now, again, that comes from years of training, but it jumped out at me, that stair step, that moving sideways, previous move up. There's a high probability the stock, at the very least, it should go to a higher high. So it should break out above here and go to a higher high. And it probably shouldn't go below here. That should act as a floor. This previous high right here is now, what used to be the ceiling is now the floor. So if we suddenly dip down and drop below here, now I say, I might be wrong on this. Maybe we're starting an impulsive move down and we're going to start trending down. Maybe I need to stop out and get out of this thing, reevaluate it. All right, I got to wrap things up from there, but hopefully that's helpful. And again, we're going to try to do things like this. There's a lot of different topics I'll be going over. We'll go over some chart patterns. Some of you, I've talked about cup with handle patterns or inverse head and shoulders patterns. You've already probably learned a lot about that just in the individual stocks we've gone over, but we'll do some more of that. I'll probably look to have a class on options for those of you who want to learn how to trade options and use that leverage in some of these trades you're getting into. Try to think of other trade management. We'll go over trade management and money management, different ways you can go about that. And these are all going to be recorded too. So if you can't make the live class, you can jump in and review the recording and get that training that way too. So, all right. Hopefully it works well. If it's really helpful to you, maybe give that feedback to the office so they can tell me to continue to do it. And we'll go from there. Thanks, everyone. Have a good week. We'll see you Thursday for the stock specific class. Bye now.